Hello everyone, I'm delighted to welcome our next set of panelists and our next panel from Promise to Production, the Commercialization Challenge for DLE. I'm delighted to introduce you all to our speakers. Moderating, we have Howard Klein, founder and partner of RK Equity. Joining him is Fabien Baudet, CTO of Lithium at Eramet, Dr. Francis Verdeen, Executive Chair at Vulcan Energy, Teague Egan, CEO of EnergyX, Samuel Moore, CEO of Iliad Technologies, Jeremy Humphers, President and CFO of Galvanic Energy, and Joseph Mills, CEO of International Battery Metals. So please join me in warmly welcoming the panelists to the stage.
Is it where? There?
Yeah. Okay, we have a nice big panel here of 6 companies that represent a very good cross-section of the DLE space, from a producer to fully financed, to Teague is in the process of getting financed, and we have Iliad down there who Rio Tinto has invested in, and a few other developers, Joe and Jeremy, who will introduce themselves in a minute. But 5 years ago, the debate was whether DLE could get financed and into commercial production at scale. Today, as I said, we have commercial operations with Eramet. We have Vulcan, fully financed, and 5 years ago, some thought that supply from DLE could scale very fast and displace conventional, hard rock and solar evaporation. That's not happened yet. Lithium's bust last cycle actually came from African hard rock and China lepidolite. But DLE is being commercialized, and there remains a great deal of interest in it at this conference in particular, from Arkansas, oilfield brines, California, geothermal brines, Alberta, oilfield brines, and other geographies. So I'm not a technical person, but Fastmarkets asked me nevertheless to moderate this panel, but we're going to focus on commercialization and financing rather than flow sheets. And so within that, I'd like each of you to just introduce yourself, quickly, 30 seconds, who you are, who you represent, and then we have a series of questions that all of you can participate in answering. So Fabien.
Okay, Fabien Baudet, I'm from Eramet. I joined Eramet in 2012 to develop a stuff that name is direct lithium extraction. That was something old and new in the same time. And today, here we are. This month in June, we are delivering 89% of the nameplate capacity in Centenario, so a long journey.
89% of 24,000 tons of production.
24,000.
So you are at commercial production.
Yeah.
At costs that are kind of in line.
We are targeting the final cost. Yeah.
Okay, so that's great. For all the success of DLE, we want you to succeed. So you are succeeding. So Francis, you succeeded in getting fully funded. How many billion did you raise?
It depends if you go Australian dollars or euros. I prefer Australian dollars. 3.9 billion Australian dollars, 2.2 billion euros. So my name's Francis Verdeen. I was on a panel earlier, so apologies for reintroducing myself. Founder and executive chair of Vulcan Energy. We are building a 24,000 ton per annum fully integrated lithium hydroxide project from the brine to the final product in the Rhine Valley of southwest Germany. As mentioned, we are fully funded now and in construction, about 6 months into a 2.5-year project construction for our phase 1 project.
Teague?
Yeah, thanks, Howard. I'm Teague Egan. I'm the founder and CEO of EnergyX and started the company back in 2018. We originally started as a DLE technology company with the plan to license our technology to existing brine resource owners that, like you said, we thought that DLE would come in and replace evaporation ponds quickly. We couldn't have been more wrong. Nobody wanted to license technology for something that wasn't yet commercially proven. So thanks for commercially proving it. But in that time, we made the decision to vertically integrate. So now EnergyX has 3 projects, one in Chile, It's about 100,000 acres, 50,000 tons that we're developing, one in the Smackover, and recently announced one in Utah. So we're a vertically integrated lithium producer now.
Sam?
Thanks, Howard. Sam Moore, I'm the Chief Executive Officer of Iliad Technologies. We are a pure play technology developer. We've got a DLE technology with 30 process zones, which allow us, we think, to have the highest level of efficiency and quality eluate, which we think is critical. We're a spin-off from Energy Source Minerals, so we've gone the other way from Teague and a number of the other DLE companies. We started out life on the Salton Sea, where ESM is developing the Project Atlas, which is a 20,000 tonne hydroxide project. And yeah, the technology was developed there on a geothermal fluid, but has application around the world. So we've come the other way. We are the pure play DLE piece, working with ESM, who are project developing.
Joe?
Thank you, Howard. So I'm Joe Mills, CEO for International Battery Metals, IBAT. So I'm a 45-year oil and gas executive, made the transition to the lithium side about a year ago. Excited to be here, see a lot of applications. So IBAT, we are a technology provider. We're not a resource owner. Our focus is really on kind of modularity. So we build our plants in fabrication yards and deploy them on site. We have actually built a full-scale commercial demonstration plant. We ran it in Utah in a really challenging project back in 2024, but we learned a lot from it. And today we're working on a project in the Smackover. We're looking at a project in the Middle East, and then we're also working on a project in Argentina. So we're really pleased to be here and excited to join this esteemed panel.
And Jeremy?
Yeah, I'm with Galvanic Energy. We began exploration in the Arkansas Smackover, and now we're in Texas. We've assembled leasehold there, and we're transitioning from just an exploration company to a development company, and then hopefully eventually expansion from there. And you know, from my standpoint, what a great time to be in this industry. As I look at this panel up and down, we're at different places, and it's exciting today to talk about what we've done as an industry. And I say that we collectively, and then to imagine the possible, which maybe applies more to companies like Galvanic. So happy to be here. Thanks, Howard.
Great. So, Fabian, I want to start with you. And actually, when we were in the back there, I'm thinking, you said your project was about $1 billion to finance. Mm-hmm. And your head grade PPM was what, in the 400s, 500s?
Yeah, 500.
Okay.
Close to 500.
And your 24,000 tons production. So this was under $40,000 capital intensity per ton. And you had a partner, your Chinese partner, you know, that came in and out, but you're still partnered with them in nickel. And then Francis, I think your capital intensity per ton was quite a bit higher than that, right? But you did get fully financed. So I'm just wondering, like, I want to get to like what are the most important, you know, debates in DLE today. But one of them is here. You have a conventional solar. Well, you have low-grade PPM, you know, solar versus geothermal. Very significantly higher different capital intensities. We haven't yet had a fully funded oil field brine, but the capital intensity is similar to the kind of geothermal. So if you just, I guess, what do you think are the most important debates? But like finance and getting projects financed, you know, where do we deploy and scale, you know, DLE? I guess just have a crack at that.
For me to be fully financed now, it's to demonstrate that you can execute a full project. We talked during years about DLE selection, but DLE, in our project, DLE is only 5% of the capex. So yes, selecting the right DLE is important, but it's a small topic. You need to have a full process integration. And even with the full process integration, you don't have a project. You need to handle a complex environment, complex macroeconomics of Argentina, for example, also for us, manage the CSR, manage the relationship with everybody around you. And so it's about, let's say, full control of the full project, so full flow sheet, full project, and with the strong industrial basis that is Eramet for us, that is not only the lithium, but an industrial group to support that, and was also absolutely clear during the ramp-up because we had strong teams 50 to 60% able to go directly on site and to support on very different topics that can be process, but not so much. That can be technology, process safety, lots of things.
Yeah, I wouldn't sort of get hung up on, you know, a solar versus geothermal versus oil field. I mean, a brine is a brine, and there's actually more variation between within those definitions than in between. So, for example, I mean, our brine is completely different to a geothermal brine in Salton Sea. So the characteristics that you'll see which make a project financeable will be the same for every different brine type. So you want obviously amenable chemistry. We're very lucky we don't have to do pre-treatment before the DLE, which is quite unique for a brine, so very benign brine chemistry. We have a higher capital intensity, but we're also building an energy project as well, so we're producing our own heat and power, and that's a massive reduction of OPEX as well. So energy within your brine chemistry, obviously other things like, you know, the flow rates that you're going to get from your wells as well, how big your resource is, how much you can scale it up over time and build further phases as well. So all of these things you can apply to, you know, to multiple different jurisdictions and different brines.
Okay. Sam, you said you were part of Energy Source, and we've known they've been around since the symbol Tesla, you know, days for anyone who's watched that. An Energy Source, I think, has a conditional loan commitment from the Loan Programs Office, I guess, using Iliad's technology. So this is geothermal. Again, that's not yet fully financed into production, but, you know, any thoughts on, I guess, geothermal? There's a lot of oil field brine kind of discussion here, but leveraging off of what Francis was saying.
No, I would echo those thoughts. Every project is different, and I mean, you know, we talk about the myth of different DLEs for different brines, and we think we can dispel that. Once you've gone through pre-treatment, I think brines, they don't look the same, but they can all be, you know, processed through DLE relatively well. But, you know, some projects have hot brine, some are cold, some have higher lithium, some have lower lithium, some have access to water, some struggle for water, some are close to power lines and some are further away or, you know, are more remote. Every project is different and in so many more ways than just the brine chemistry or just the lithium content, and project developers need to manage and balance all of those different elements to make sure that the project is actually economic in whatever geography they find themselves in. So, you know, obviously it'll be nice to get a couple of different types of projects away, you know, so the solars, you know, obviously with evaporation, but now moving to DLE, get some, you know, geothermal projects, get smackover projects away, and show the world that these different sources are viable and economic, but they're all very different in more ways than just the chemistry itself.
Okay. And Teague, you said you have 3 projects. One's in Chile. I guess that's more conventional solar type, and then you said you have one in Smackover, and I think you have one in Utah. Is that what you said?
Yeah.
Okay. So what's your sequencing? Like, which project's likely to get funded first?
Well, our Chile project is nearly fully funded, so we feel really good about that. We'll be making an announcement here in the next week or two to talk about that. And then we'll look to fully fund our Smackover project next. We've already completed a demonstration plant for that. It's one of the biggest demonstration plants in the US. It's producing battery-grade lithium hydroxide already. And then in Utah, we just signed an agreement with Compass Minerals. And that's really interesting because we don't need to do any upstream exploration or there's no CapEx because the brine is already on the surface in their existing evaporation ponds that they use to produce sulfate of potash and magnesium chloride. So we just pull from a pond, run it through our process, and then put it back in the next pond, and then they take it on from there. So to your point, you know, these are 3 very different projects that do require different technology, different processes. We're producing different products, lithium carbonate for Chile and Utah, lithium hydroxide in the Smackover. And that requires kind of a different technology portfolio, which we have because of our early days when we were just focused on technology.
Okay, and Joe, IBAT has John Burba, I guess the scientist behind the symbol back in the day. So what is, IBAT's a public company, so what are your paths to commercialization?
Yeah, great question. So yeah, actually, Dr. Burba is here today, and a big reason why I joined the company. Yeah, so look, we, again, one of our competitive advantages is the modularity. As Samuel mentioned, not all DLEs work at every single type of brine. Our technology works really well in the high temperature environments. And so we see really applications for our technology that couple really well with oil and gas production, as well as helping the salars with our technology. So yeah, in terms of our path, obviously we built a demonstration commercial plant. We are in active discussions to redeploy that plant. So we're pretty excited about the opportunity sets. We're finally starting to see, a lot of brine, especially coming from the Smackover. And no surprise, every brine is a little different, even within the Smackover. I mean, within several miles, we're seeing quite different variations, different chemistries. And so that's been important to us as we have been testing a lot of brines, how our media and our technology applies to it. We've had very, very good results. We do produce a really, really clean eluent, which is, we think, critical, obviously, to reduce the cost. One of the key things we've heard from our customers, and I know Jeremy will talk about it, is, look, most of our customers, are not ready to move forward if all they'll ever be is the marginal producer, meaning if they can only make money in a high price environment, they're not going to move forward. So we as a DLE industry have to prove to our customers that, we can be low cost and efficient. And that's one of the things that we at IBAT are really focused on, is being the low cost efficient operator to help really move the economics forward for our customers.
Okay, and Jeremy, you're Galvanic, which back a few years ago made the press when Exxon bought, some acreage from you. But you have other acreage, and you're not looking to sell, but you're looking to produce, you told me yesterday, and this is in Texas, and very high ppm relatively. So why don't you just, I don't think the industry knows that much about that project, so what are your plans?
Sure, we've assembled a similarly sized position when you look at acreage. The resource seems to be better over on the Texas side versus Arkansas. Both are very prolific, at least on the global scale. The first time around, it was great to bring Exxon into the industry. It's exciting to watch them. I listened to them a little bit earlier today to continue to advance and do everything that they're doing. For us, the industry, as the title of this panel indicates, is we're long on promises and short on production. And it's a great time to move out of proof of concept to really push into proof of value and navigate all the price discovery that's going on. And I would say that's one of the things that we're trying to work through here in our friendly discussions and debates as we build out these partnerships, is what's the relative value of each component of this supply chain, and then ultimately what will be the contracted value. What we hope to do is come forward with a business model that, frankly, you could describe it as better before bigger, and that's just for our own portfolio. So we want to come forward with what I would describe as a smaller sized commercial operation, learn from that, and then optimize and replicate that across our leasehold for years or decades, however long it takes.
Okay, great. So we still, have a varied kind of financing environment. I mean, lenders are still like kind of getting comfortable. I mean, lithium's been crazy volatile generally, but what does it take? I mean, you financed it very differently off of Aramet's balance sheet. You financed it by getting good offtake partners, et cetera. But like, what do you think? And I guess Teague, you said you're very close. So from a financing perspective, what will it take for lenders to kind of view DLE as just more conventional, compared to conventional technologies? Why don't you start, because you went through the process, Francis?
Well, I said this earlier as well, so apologies for repeating myself, but it takes a lot of time, and it takes a lot of capital. Obviously project financing, and most of us will be doing this off project finance. We won't be funding it off balance sheet. You have to convince some very, very conservative bankers that your process works stably over time. And so that's lab work, that's small pilots, bigger pilots, demo plants operated over a continuous series of time, and that takes a lot of capital. So I was saying earlier, when we got to FID, we'd spent just over 500 million euro on the project. That's buying the infrastructure, the wells, that's developing the technology, that's building out these pilot and demo plants, operating them over time. And so it's a lot of investment and a lot of time that gets you to that point. And once I think you funded that first project, I think what you're going to see in these fields is, the brownfields expansions will be a lot more straightforward. So train 2, train 3, a bit like in LNG, it will be much more straightforward. But yeah, funding that first one, it takes a lot of convincing to convince those project finance teams.
Wow, so you spent 8 years and $500 million before you got fully funded, and you've been at this since, you said 2012, 14 years to get to commercial production.
Yeah,
right?
developing everything.
Okay, and Teague, I think you've raised, I think you said $180 million to date, and your Chilean project, you said, is like almost about to be fully funded, so that's quite a bit less than $500 million for a geothermal project, but maybe your capital intensity was very low. Are conventional solars just easier for DLE? I say conventional solars, like low ppm brine solars, easier or cheaper, or is it South American costs that make it cheaper?
Each project is bespoke, and like as I look at our Chile project versus our Smackover project, in the Smackover we have to drill a lot deeper, so there's a lot more upstream capex involved, whereas in Chile we're drilling, relatively very shallow, and that's been very advantageous for an overall lower capex number. The brine is also somewhat cleaner. And I think that we're producing lithium carbonate there. Like which battery material you're producing affects your total overall capex because it affects your flow sheet. So all of these are factors in going into the total capex number.
Okay. I guess where do the panelists believe, I mean, you're all representing slightly different, angles here, so you'll have some bias, but where does DLE create the greatest incremental value today? Is it in South American solars, geothermal brines, oil field brines, or some combination of all three?
All of the above. I mean, the great thing about DLE is that it opens up resources that wouldn't be viable in any other way, right? So we wouldn't be talking about a brine-fed lithium industry in the US without DLE, and Canada, Europe, etc. So I do think that it makes things viable that we just couldn't do before, and therefore allows geographic diversification that we couldn't have had before. So I mean, in terms of giving overall confidence and addition to the lithium supply story, it unlocks things that couldn't be done. And then you go, to the more traditional solar type supply. It makes everything more efficient. Recovery rates, speed to market, processing, and it can add incremental value there. But really, for me, it's both. Or it's all of the above.
Okay. And Joe and Teague, you have potential in both types?
Yeah,
or all types?
There's no doubt. I agree with Samuel that it's all the above. For my company, we certainly have focused more on the oil field brines. Again, it has a really good application with our technology and our skill set. But I don't, in fact, we are working on a project that there'll be a geothermal unit in front of us. And then separately, we're working on a solar. For us, though, I mentioned earlier, we like the water hot. So that's why geothermal and/or oil and gas really works well, because we don't really want to have to heat the water up. That's expense. When you get into the solars, that affects our economics. But I think it's all three. But for my company, we're very much focused on the oil field brine and the geothermal sides.
Yeah, I think that for your question, where does it provide the most incremental value, is obviously a place where evaporation ponds are impossible, right?
Yeah.
Like exactly what you just said. You know, I think that for us, we've looked at what's the lowest hanging fruit in terms of the accessible resources that are out there. We obviously want to focus on the highest concentrated brines that we can find. Like in Chile, our salar ranges from about 300 to 1,100 parts per million, which is a pretty good brine. In the Smackover, we're looking at 500 to 700 parts per million. So why would we go look at something that is 100 parts per million if we have access to those higher ones? That's at least how we've thought about which projects we want to acquire into our portfolio.
Okay.
Yeah, and I think the value proposition of the three are quite different. For me, we have two types. The solar is you are looking for the best economics, capex intensity-wise, when we are talking about just the price of one well, just that, the price of one well, or in the Rhine Valley to be under pressure is an high cost to be under pressure, to have a deposit under pressure and to keep this pressure in the DLE. So it's high cost. But solar is what you are looking for, very good economics. And for our perspective, in Europe, to go to a geothermal brine, or in US, I think also, it's more a matter of security of supply. And so you need to have somebody, can be the state, can be Europe, the European Union in the other side of the ocean, that will pay for that. Because if you select only the good economics, from our point of view, you go to solar. But you have another story with lithium. You want to secure more than single metal or economics. And in Europe, in US, I think it's much more than technology, and that's its delivery value for the place.
Okay. Argentina and Chile are, very friendly, kind of like to the US and Europe. So from a security of supply perspective, less of a concern than maybe some other geographies. If the capital intensity in you were 39,000 is pretty low, right? What's your plan, beyond this 24,000 tons? Could you copy paste this at Centenario, or are you going to go after other salars in Argentina? Or you mentioned to us you have something geothermal in Europe. Like, what are your thoughts in terms of growth?
Today we are talking about, let's say, having the confidence of the finance guys. Okay, so the idea for us today is to prove the reproducibility and to copy paste more and not to put more innovation. For us, the value creation will be to prove that we are able to replicate this type of technology, deliver the low capex intensity, but we are thinking that is even too high. So we are working on reducing the capex intensity because the lithium price is not so high. Even today that is high is not so high. So we need to work on capex intensity. We need to work on delivering the lowest unit cost. And in the middle, why copy-paste, one replication is so important is stability. So because you will deliver the full value with your capex, your unit cost, if you are able to produce close to 100% of the time. This is robustness. This is having the good team to reach the good OEE, so stability and delivering really the tons. And so for us, it's quite key, this repetition. So in this plan, this is expansion of the 24,000 ton brownfield, because the layout of the first phase have the space. It was in the layout to expand by close to 50%. So we will add 11 KT to reach 35. So this is the stage one of the expansion. For that, we will build a second evaporator. And we have a stage two that we will put more DLE to saturate this high capex intensity equipment to deliver, let's say, close to 50,000 tons in Centenario. And so this is, let's say, the full potential of this first unit. But as the deposit is huge, we have the full control of this deposit, 60 kilometers long, 5 kilometers by 5 kilometers. The plan, and today we are doing the math, we think that we have a potential of 150 in Centenario only. Wow. And so the idea is then, again, replicate, plants of 48, 50 with 2 independent lines to have redundancy and to copy-paste this plant to achieve the full potential of the standard that is 150. And let's say offer the same value, so full flow sheet, full control of the project, execution, delivery of the final value at cost on time for any strategic partner that want to develop his asset.
So your plan is to grow from 24,000 tons to 150,000 tons?
In Centenario.
In Centenario. Are you planning to do any other projects
Yeah.
alongside that? And what time frame is that 24 to 150,000?
Today, yeah, it will be, let's say, full production of all this stuff. We are really doing the stuff. Financing is quite important. So for us, the first demonstration is the expansion. We are preparing the DFS. The DFS will start in November. We will have 1 year, one year and a half of DFS, then 1 year and a half of construction. So we are talking about 2030.
2030 just for the first expansion
and then,
from 24 to what,
because
35?
Detailed feasibility study, you cannot compress too much the time if you don't want to have big mistake to solve on the field. And at 4,000 meters of altitude without the industrial basis that you have in Europe, you have in China. In China, you can resolve problem very quickly. When you are really alone in the middle of a desert, you need to prepare your project, to execute very well the project. So that's why it takes time. It takes time to develop a full capacity.
Okay. And the lithium industry is growing 15 to 20% a year as it has for the last number of years, but it's off of a much bigger base. So the number of tons that need to come on stream, the market will absorb the tons that is not fast, right? So there was a period of time where we thought, as I said earlier, that DLE would come on very fast. A key message is that things take a lot of time.
No, an industrial project is long by nature. It's complex.
Yes.
They're big infrastructure projects. So I think what you're going to see over time is that, and typically they're going to be very low down the cost curve. So I mean, the cost curve with lithium at the moment is like that. You're going to see a gradual flattening of that cost curve over time, and you're going to see a base that's built out. And ultimately, I mean, you've got some hard rock projects that are just freaks of nature and are at the lower end of the cost curve. Most of them are at that much higher end and will be basically swing producers in that market. So they are able to switch on more quickly. But we have the same strategy, obviously slightly further behind Eramet as we're in construction now. We're not producing commercially yet. We'll be producing commercially 2028. Phase 2 is aimed to come on 2.5 years after that. So every 2.5 years we'll build on another phase. And I mean, again, it's a similar strategy. The key is design one, because that's where a lot of your capital intensity goes, and then it's build many across the field. And we have a very homogeneous brine chemistry, so we can print and repeat again and again. And that's when your capital cost starts to come down as well.
Are your next phases also 20,000, or do you have?
Yep.
They're 20,000 trains.
24,000 thereabouts. Okay. So we're working on the pre-feed study for our next phase. Likely will be carbonate, not hydroxide, so we have flexibility between the two. And that's the other thing with DLE, right? So because it produces that high purity lithium chloride, you have great flexibility for different products. And there's even, I mean, there's growing demand for lithium chloride directly as a product as well. So I think it's well set up for the next stage.
Okay. And Teague, how big is your project in Chile and in Smackover?
Yeah. By the way, all true. Like lithium chloride is the base, and then you can go to hydroxide, carbonate. We're even looking at metal. We're even looking at lithium isotopes for nuclear reactors. But to your question, our first train in Chile is 7,500 tons. So we have a modular approach as well. We think that's the smartest way to go. And then that'll be done in 2028. And then 6 more trains where some aspects are in that 7,500 modular, but then like our evaporator is larger than that. So it goes up to 50,000 from there. And then we have phase 3, which is another 50,000, and then phase 4 up to 150,000. So thinking along the same lines, and the market can easily eat all of that up. Even if we execute on that by 2034, the market will be at 3.5 million tons, where, you know, what is that, like one? You know,
All these projects are going to be needed, and you'll all be competing for capital and for where you are on the cost curve, and that will ultimately dictate how profitable you are. But the tons will be needed, conventional and unconventional, so it's exciting. So Jeremy, your plan is what? I think you told me it's 10,000 tons last night?
Yeah, we want to start out with 10,000 tons. We may have extraction facilities of 5 each, where we can test maybe a couple of different technologies and then take it into a single carbonation facility. We would start with 10, and then very similar to Aromat, looking at expansion, we would try to accelerate future-sized expansion opportunities, both in time, and then we would make them better on cost as well. This is kind of what we're familiar with our time back in oil and gas, and so we would just try to optimize things as we go. Frankly, for us, it's how do we open as many doors and then keep them as open as long as we can. And so after this first success of production, bringing it online, if we want to move fast, we can do that. If we want to move more measured, we can do that as well. I think it's looking at the market and responding to the market signals. Everything would indicate here in the United States we can take plenty of supply. But just when you think you've got markets figured out, they turn on you. And so for us, just kind of watching those and responding to those is a key tenet to our operation, Howard.
Okay, so if we were to exclude Rio Tinto's application of DLE, there's no current DLE outside of China, I guess, as part of the overall lithium supply. Is that fair? I think that's fair. You are now in commercial production, so let's call it 24,000 tons or thereabouts. 10 years from now, right, we're in a 4 million ton market environment, let's say, or whatever the number is. I'll go down the line for each of you. How many tons, of lithium in the industry is being produced?
is this including Rio Tinto or not including Rio Tinto?
Yeah, you could include Rio Tinto, yes, because they're
Include
applying
Rio
it for
Tinto.
Rincon.
Why was Rio Tinto in inverted commas?
Sorry?
Why was Rio Tinto in inverted commas out of interest?
I was just saying because, well, Rio Tinto, I don't know how many tons of Rio Tinto's existing supply is using the technology.
Well,
DLE technology,
I would argue,
historic DLE
Phoenix has
technology.
been operational since 1996. And,
Okay.
by definition, it is direct extraction. So, how you get rid of your water after that, whether you do it using, mechanical methods, whether you use solar ponds, it's kind of academic. You're just getting rid of water. But they've been doing direct extraction for 30 years.
I guess Paul Graves used to call it hybrid DLE, so it's not full DLE. So anyway, so fair enough. How many tons of lithium do you think the industry produces 10 years from now? Let's go down the list.
I know my plan, 150
150,
centenario,
yeah.
and then let's say we are open to any solar development, deposit development as a key partner. So minimum 150 on our side, and maybe double or triple of that.
Double, sure. Okay, so you'll have 33 to 50% market share of the DLE. Okay.
It's 10% of global lithium chemicals production now, more or less, I think. I would see that share increasing. As you correctly pointed out, there's obviously supply coming from elsewhere, but I would certainly see that percentage share increasing. I'm not sure by how many tons, but I think we'll see incremental increase above 10%.
Right. There's an interesting saying that a lot of people think technology is impossible until it becomes inevitable. And, whether it's cell phones or air conditioning, there'll be a really rapid curve once it becomes commercialized, which it essentially has. Now, mining may be a little bit different because it takes a little bit longer, but I think in 10 years, you're easily looking at 1 million tons. You have Exxon that's going to come online in a big way. You have Chevron that's going to come online. You have Aromat. You have all of us. I think that it's going to happen in an inevitable way that it is going to exceed expectations.
Okay, so 1 million out of 4 million tons. So 25% market share, 10-year prediction.
Minimum.
T. Geoghegan. Minimum.
Minimum.
Okay.
Yeah, I support, the aspirational approach that Teague has. I'd love to think, and I certainly agree that it has the potential to do that. One of the things that the US is very good at is deploying capital quickly when something is shown to work. And we've been mired down with prices, and that's been the subject of the last few conferences. But as that unlocks, and as DLE gets proven out in its current form, and then optimised to actually bring the cost curve down and show what it can really do, I think the deployment can accelerate and be really substantial. And I would like to hope that it can provide the bulk of the growth in the lithium demand. I just think it's the cleanest and should be one of the cheapest ways to produce lithium. So,
Spoken like a true DLE aspirant. Joe?
Yeah. So, look, I'm bullish around it. Personally, I mean, look, they got a lot of smart guys on this panel. You got a lot of people pushing to figure this out, and I agree with both Teague and Samuel that, once the adoption rate hits, it's the learning curve. Look, I've been in oil and gas 45 years. I was there at the beginning when the shale plays. One of my early companies was Sonat back in the 80s, and we were doing the Austin Chalk, and we were employing the horizontal drilling and then applying the fracking technology to it, and we figured it out. And when we figured it out, the adoption rate, as we call it, the learning curve, goes exponential. I think DLE is going to be the same. I really believe that there's a place for this technology in this space. Lithium is going to continue to grow up and to the right. 4 million tons, hell, it could be 5 or 6. I think DLE is going to be 15 to 20% of that market. So I'm with Teague. I think we could be upwards of 800,000 to 1 million tons of that supply.
I'll offer two things, Howard. Let's get, for all the nations outside of China, let's get in the race and let's get on the pace that they are. So whether they're at 10%, 15, or 20, 10 years from now, let's be at that level. The second thing is, I want to inspire all the technical people out there, all you young studs in particular. DLE is a 40-year technology. In the next 10 years, I think there'll be another technology that'll come along, and it'll be either an evolution or a revolution of DLE, and it will begin to penetrate how we can bring more of this resource to the market and create greater commercial optionality around the world, which is great for our energy supply chain markets.
Okay, well, thank you very much. This is my 10th Fastmarkets event in a row. So I look forward to talking to you all in 10 years, having 10 more years, and revisiting this expectation. But like China had the Made in China 2025, right? So this is kind of like Made in America and Europe and Argentina 2035. So let's see. Good luck to all of you, and thank you very much for joining this panel.
Thanks for having
Thank
us. Cheers.